Time now for the business news, and Stephen Carroll is here. Morning, Stephen.
Hi, Hala.
Let's start with the stock markets. They're dealing with the aftermath of the global market slump.
That's right. After huge falls on the European markets yesterday, we've seen shares here in Europe open up ever so slightly at the start of the trading day. Nothing like gaining back the losses of around 3% yesterday. We're just seeing, as you can see, small gains across London, Paris and Frankfurt. The banks still trading pretty close either to zero or in the red in some cases. Deutsche Bank was one of the worst affected banks yesterday. It closed down 9.5% at the end of the day. It's up by around 1% at the open in Frankfurt, but really just a sort of a bounce there that they're seeing. Nothing like gaining back the huge losses that we saw on the markets on Monday. In Asia today, the sell-off was still very much in evidence. We saw a huge fall on the Nikkei in Tokyo. It closed down 5.4%. There was also a drop on Sydney's ASX 200 index too. Chinese markets are closed, which means there are fewer share volumes being traded in Asia at the moment. Shanghai, Hong Kong and the Kospi in South Korea all closed for trading today. In Australia, we also saw energy companies following the banks into the red.
Well, Stephen, why are those bank shares falling by so much?
Really, the last time we saw bank shares fall this much was at the height of the Eurozone crisis, but we're looking at a kind of range of different factors being at play here into what's happening with bank shares. Generally speaking, global economic growth is low, the price of oil is low, and interest rates are low, and that affects the earning power of banks, how much money they can actually make by charging for loans. Now, the earning power, that's prompted some investors to sell their shares in those banks. None of these factors are particularly new, but there are some traders saying that the Japanese central bank's decision to introduce negative interest rates has caused a sort of a trigger worldwide that's led to this sell-off of bank shares. And that's on top of fears that banks perhaps haven't prepared for a sustained global slowdown, particularly when it comes to their investments in oil. There is, however, a sense among market experts that there's an exaggeration of this sell-off, that perhaps the fact things like markets in China being closed is exaggerating these falls, but still pretty significant falls we are talking about, and no sign of a recovery just yet.
Let's move our focus to France now and a privacy ruling that's going to affect Facebook.
The French privacy regulator has threatened to fine Facebook if it doesn't change the way that it handles personal information. Now, among other changes, the CNIL says the social network must tell people who aren't Facebook users that their internet use is being tracked via the like button on certain websites. It also ordered Facebook to stop some transfers of user data to the United States. This after the European Court of Justice struck down the so-called safe harbour data sharing deal. Now, a spokeswoman for Facebook says they're confident that they do comply with European law and that they will engage with France's privacy watchdog on these issues.
Let's stay in France, Stephen. Services by the car-hailing app Uber are facing a disruption today.
Uber is suspending its services in Paris for 4 hours today in protest at regulation changes announced by the French government. The app won't work between 11 a.m. and 3 p.m. French time over measures which the company says is putting 10,000 drivers out of work. The changes relate to licences for those drivers, among other measures, and they were announced following protests by taxi drivers here in France.
Let's hop on across to Russia now. The falling value of the currency is causing protests there.
We've seen the ruble really slump against the dollar, not only in the past few months, but over the past 5 years, it's lost some 2/3 of its value. Now, that fall has been accentuated in recent months. The change in currency value has hit those who hold mortgages in dollars particularly hard. Some of those borrowers staged a protest in Moscow on Monday, calling for help from the central bank. Yuka Roy reports.
Despite some rough treatment by the police, angry protesters wouldn't budge. They said they just couldn't cope anymore.
Most of us are already jobless. We've sold all our belongings. We're not asking for any help. We are demanding that they do something.
Before, my mortgage payment cost me 26,000 rubles a month. Now it's 80,000. That's my family's whole budget. I can't pay that.
The ruble's decline has hit those homeowners particularly hard because they borrowed money in dollars. While their incomes in ruble haven't changed, the value of their credit has skyrocketed. The Russian currency has steadily weakened against the dollar in the last 5 years and is now worth about 1/3 of what it was before. Both domestic and foreign-owned banks offered dollar mortgages to Russian clients, especially in Moscow and St. Petersburg, before the 2008 financial crisis. This extended family in a Moscow suburb took such an offer a few years ago, as they decided to take in foster children and buy a bigger house. Now they're at risk of losing their home.
We wrote many letters to the president's office and got no response. We wrote to the bank itself, but they said there was nothing they could do.
Russia's central bank last year advised banks to accept losses and convert dollar mortgages into ruble ones, but gave no firm orders.
That wraps up our business news. Thanks very much for that, Stephen. Stephen Carroll, our business editor, taking us through the day's top story.